Typically, distributions from your traditional IRA are taxed as ordinary income. But what if you could avoid those taxes? That's what we'll be discussing in today's video. My name is Spencer Ford, CEO and Wealth Advisor at Conservative Financial Solutions. I'm also a certified financial planner professional, so let's get into it. So as I mentioned, when you take money out of your traditional IRA, it is typically subject to ordinary income tax. But there are ways to avoid paying taxes on that money. One way to avoid those taxes is by utilizing something called a qualified charitable distribution, or QCD. Now, as you may have picked up from the name, qualified charitable distribution, this is a gift you are making to a qualified charity. So you aren't actually receiving the funds, the charity is. So this strategy may only work for you if you're already charitably inclined or already giving to a charity or your church, as long as your church is a qualified organization. A QCD allows you to take a distribution from your traditional IRA and exclude it from your taxable income, meaning you owe no tax on that distribution. If you are subject to a required minimum distribution, or RMD, a QCD can actually be used to help satisfy all or a portion of your RMD. And if you're not familiar with what an RMD is, or required minimum distribution, check out the video here and it talks more about required minimum distributions and what you need to make sure you get right to make sure you get those satisfied on time and in the right way. Now, avoiding taxes sounds great to me, but there are some rules that you need to make sure you follow. First of all, a QCD can only be made from a traditional or rollover IRA account. You cannot do a QCD from a 401k, 403b, 457 plan, thrift savings plan, or any other type of employer-sponsored plan such as that. You must also be 70.5 years old or older to do a QCD. Lastly, the money must go directly from the IRA to the charitable organization. The money cannot pass through the IRA holder's hands. Otherwise, the distribution becomes a taxable event. Most financial institutions have a form specifically created for facilitating the completion of a QCD, and that'll need to be filled out correctly and submitted to complete the process. Now, the maximum allowable amount for a QCD in 2025 is $108,000. There's a lot of headroom there. And donations cannot be directed towards donor-advised funds, supporting organizations, or private foundations. Again, they need to be a qualified charity. At the end of the year, you'll receive a 1099 tax notice for your IRA. The QCD amount will automatically be included with all other taxable distributions from that IRA account. There is no special code for a QCD. Therefore, you will need to inform your tax preparer what portion of your IRA distribution or distributions were done as a QCD. Now, here's why you might consider utilizing a QCD. Let's say you are someone who already makes regular contributions to a charity or your church. But when you go to file your taxes, you're just taking the standard deduction. You don't have enough deductions to itemize your deductions, so you aren't getting the tax benefit of your donation. Since a QCD goes directly from your IRA to the charity, it doesn't count as part of your income. Therefore, you owe no tax on that distribution, and neither does the charity. Even if you itemize, a QCD may still make sense. For example, if your required minimum distribution bumps you into a higher tax bracket, which may also make more of your Social Security taxable, a QCD might help mitigate that. As always, before deciding whether a QCD is right for you, please talk to your financial advisor and a qualified tax professional. I'm Spencer Ford, and if you found this video helpful, please hit subscribe, and we'll see you in the next one.